long weekend. Mr. Sunil Dugal is with us. Mr. Dugal, thanks much for joining us. Well, first up, are you beginning to see any pressures on consumption? For the simple reason that the entire range of consumer durables are beginning to see weaker and weaker sales, sometimes 12-year lows being hit by some products. It's a far cry to expect that to come into the personal product segment, but are you seeing any consumer demand fall?
Not at the moment. I think the fourth quarter numbers probably would see a reasonably robust demand profile. But I think we can't rule out the possibility of demand ebbing a little bit in the next few months to come, because it normally lags that of the higher value products. So at the moment things seem to be fine, but we are a little bit cautious on the near-term outlook.
Okay. Is there any specific category where you perhaps have seen some kind of downtrading or fall in consumption, high value or discretionary kinds of products?
Not as far as we are concerned. We have comparatively few discretionary products in our portfolio. Most of them are staples at the lower end of the pricing pyramid. But the couple of items which we have which can be considered discretionary, like say the fruit beverages, which are very high priced comparatively speaking, are actually showing pretty good growth, and there's been no remission of growth in the last few months. So it's contrary to expectations, which could be true just for us, or it could be part of a larger element in terms of consumption habits. But so far we've not seen any significant downtrading happening.
Okay. How are margins panning out in the sense, do you witness any changes in raw material prices? After all, we have seen food inflation, and that could form a large part of your raw material. So is there a pressure on margins from the raw material front in terms of higher prices to pay?
Well, aggregate margins remain flattish. I'm talking about the gross margin levels on a YOY basis, which are a little bit disappointing, because we did expect margins to expand considerably this year, but they have not. That's not happened, and it's largely consequent to very high food inflation. There have been pockets of friendly prices too, in terms of say packaging material, the hydrocarbon derivative, etc. But by and large, the food basket has remained on a high note, and that has meant that our margin profile has actually not improved, or if it has improved pretty marginally, and we were hoping for a much better yield from raw materials this year.
You had some of your distribution initiatives, Project Speed and Project Double. You had gone seriously into distribution improvement. Are you getting any gains from that investment?
Oh yes, the gains are visible. We've shown volume growths which are perhaps ahead of most categories. The volume growths are close to 10%, and we do think that unless there is significant slowdown in the market, we should be able to retain that kind of volume growth. And I would attribute a large part of this to our rural expansion, which has been very, very consequential in driving these kind of volume growths. So it's been very important, I think very successfully executed, and will yield us long-term dividends.
So can you give us some guidance in terms of what you expect both volume and value growth to be in FY14? Would it be, high double digits, high teens? Could you do better than the current year?
Unlikely. I think I would peg it at current year levels, which are close to 10%. That would be a reasonable expectation. High teens, I think, is practically ruled out. Mid-teens, possible if the year pans out to be much better than what the outlook currently is. But I think one would take a slightly conservative view in view of the uncertainties as far as the economic environment is concerned, and peg it at or around 10%. In fact, I've been giving an outlook of around 8 to 12% as a band, and 10% is pretty much where we think we will be.
Will ad spends increase?
I don't think so. I think there may even be a little bit of moderation in ad spends, because I think if the outlook remains bearish, there would be pressure on companies to cut back a little bit in terms of new investments, new product launches. So they may see a little bit of downward pressure on advertisement. In any case, I don't think the advertising ratios would be ahead of what we saw this year. They would at best be at current levels, perhaps a little bit below.
What is this year, 14, 15?
Yeah, around 14%.
Okay, so it could be that or a less next year is what you estimate?
Or maybe 50 basis points lower than that. I don't think there will be any dramatic movement, and certainly I don't see any upward movement. The economic outlook brightens from what the current forecasts are.
Okay. Actually, that was what I was coming to. What's a good year for Dabur? Is it a good monsoon that year because raw material prices would be influenced as well as demand would be, or is it general GDP growth like it is for several companies of your ilk?
I think rural GDP growth is perhaps the single most influential factor as far as our business is concerned. Second is inflation, because inflation does play a spoilsport in terms of compressing demand. So in terms of the first two elements, it would be rural GDP growth, and second, price inflation. Monsoons and all are now becoming a little less relevant as far as overall business is concerned.
Okay, will we see any inorganic initiatives? Are you still keeping your eyes open?
Probably not. I think the whole economic environment perhaps is, conservative side. We do see valuations in India still extremely high. We do expect valuations to correct going forward. So you would rather conserve cash, sit on cash, and wait for the right opportunity to come back at lower valuations, which we do predict will happen over the next couple of years.
Okay. Your international business is about 30% of your total sales.
That's right.
Will that do better? Is it doing better even incrementally?
Well, this year has been not as good as the previous year, and there's been a host of reasons. But I think next year would be better than this year. So, it's a little bit more volatile than the domestic business. We do expect a pretty good year from international business in fiscal 14. Of course, there are a couple of concern areas like Egypt, which if they are able to navigate those, it should be a pretty good year for the international business. Better than what we've had this year.
On that positive note, Mr. Duggal, thank you very much indeed for joining us.
Thank you.
So that from a consumer heavyweight, it's at best going to be a steady year, not terribly encouraging, but okay, at least not too much of a downturn. Let's take a break and now an all-important chat on the F&O space. 2 hours for the contract to wind up. A dreary contract it has been. Manoj Muralidhar of IIFL to join us. Which are the